Hello and welcome to Realty Returns, a brand new series on money control powered by 99acres.com. I am Nandita Khemka and I am here to tell you all you need to know about investing in real estate. If you're looking to buy a house, your very first one or even a second one, watch this series to find out if this is the right time to buy, which are the hottest locations you can tap and how much it would cost. Coming up on the very first episode, a man who needs no introduction. Real estate tycoon Niranjan Hiranandani, who is the chairman of the Hiranandani Group and Naredco, will be joining us, and also joining us will be Ravi Shankar Singh of Colliers India, and they will be sharing their thoughts and insights on the latest trends in real estate, what's happening and what you need to know as you think about buying property. But first, let's zoom out a bit and take a look at the big picture. Where does the market stand right now? Is real estate a smart investment? And should you be looking at it for the long term or the short term? Let's dive in.
Twenty 2023 was a bumper year for developers. Home sales hit a decadal high of 4.76 lakh units in the top 7 cities in India. This was after years of regulatory churn like RERA and GST, errant developers facing law enforcement action, and weak demand from people who lost trust in the sector as an investment. After the pandemic, real estate demand saw a resurgence as people used excess cash to invest in new homes, helped by low interest rates. Incomes rose for many and demand also increased for premium and luxury homes, which bring higher top lines and margins for developers. After freezing the repo rate throughout COVID-19 at 4%, the RBI raised it for the first time in May 2022 to 4.4% in response to rising inflation. Since then, the central bank has hiked the rate intermittently by 185 basis points in total to 6.5%. Real estate analysts say that while luxury sales have been unaffected, the middle and lower end of the housing market have been hit relatively hard. Unsold inventory in major cities, particularly Mumbai and Hyderabad, has continued to rise as a consequence. Property consultancy JLL has noted a steady increase of unsold inventory across the top 7 cities in India since 2019, even as sales have increased at a fair clip. In Mumbai, India's largest housing market, the number of unsold homes has been rising since 2022, and it now stands at around 1.53 lakh units. In the national capital, unsold inventory shows a decline since 2021. However, analysts believe that an artificial scarcity in mid and affordable homes in the Delhi NCR market may be the cause. In stark contrast, in Gurugram, NCR's premier real estate market, the number of unsold homes has declined since 2019 to 2023 from 14,206 units to 7,482 homes in 2023. But it rose again in 2024, increasing to nearly 13,000 units till date this year. In India's technology mecca, Bengaluru, inventory levels have reduced from over 90,000 units in 2022 to around 68,000 units till date. In addition to Mumbai, Hyderabad has seen a significant rise in the number of homes available for sale. According to JLL, the inventory in Hyderabad has increased from 23,000 units in 2019 to over 1.29 lakh housing units currently available in Telangana's capital. The overall trend highlights a regional disparity in the demand-supply dynamics of the real estate market.
Well, after a 3-year upswing, the real estate boom is showing signs of cooling, with sales in the top 7 cities dropping for the first time in 2 years. As we stand at the brink of a shift in the interest rate cycle, the big question remains, is now the right time to buy a home? Well, let's get you some perspective on this. And for that, we're joined by Niranjan Hiranandani, who's the chairman of Hiranandani Group and Naredco, and Ravi Shankar Singh, who's the managing director of residential transaction services at Colliers India. Great to have you this afternoon, gentlemen. Thanks a lot for taking out time and joining in. Mr. Singh, coming to you first. Is this an appropriate time to buy a house, given the fact that we are standing at the brink of a turnaround in the rate cycle? Because as rates go down, more buyers will enter the market, which in turn will push up property prices. So is now the right time to act, or should one wait it out and wait for that rate cut to come by? What would you say?
Nandita, to answer your question, firstly, are the rates going to come down? Is a big question in itself. While the pace of sales have been slow in the last quarter, I see it increasing in Q3 and Q4 of financial year 24-25. So, in the festive season itself, the projections that we are getting right now, we are looking at, top seven cities selling about 1.5 lakh homes across the top seven cities. So, to answer it directly, I would say that if you desperately have a need for a home, it's a good time to buy, and don't treat it as an investment product.
Mr. Hiranandani, coming to you then, there are signs of moderation in growth, as pointed out by Mr. Singh as well. Some realtors have pointed out that demand has been economy driven and has not been impacted despite higher interest rates. On the other hand, inflation has been cooling off, although it did pick up in the month of September, but it has been within RBI's comfort zone. So how should home buyers factor in the inflation to growth dynamics in their decision making when it comes to buying a house?
Thank you very much for inviting me. It's such a pleasure to be with you again. The point is very simple. The economy is growing at the rate of 7% compounded, the fastest growing economy in the world. Today's date, even NRIs are now almost 20% of my company's sales at this point of time in the last 1 year. So overall, the interest in India has definitely grown. FDI into real estate is also increasing, both in the case of commercial and little bit into the residential side also. So that is also going up. Overall, if you see, there is an interest as far as housing is concerned. The uptime in terms of it in the last 1 year, 12% growth has taken place. Yes, the last quarter has seen a little drop, but those also you must remember there was a period of Sharad in the last 1 month, and that also puts the numbers at a little lower rate than what can be done in the normal period of time. During the thing, people don't buy during that period. Overall, if you look at it, my feeling, you are going to see a further growth as far as real estate is concerned in the next 1 year. Almost 10 to 12% compounded growth in this year. From today onwards to the next 1 year, a 12% growth in the total overall number of sales that is taking place. So I am very bullish as far as the overall number of sales. The second point is the pricing of products, as you have shown on the screen. The question is, the pricing of products may not increase at the pace at which it has increased in the past. That is possible to do. But definitely, overall numbers will grow up. Sales price may also go up in the period. And we see a lot of infrastructure development taking place in some of the cities where we do believe that the price points in terms of sales will also go up because they are much more value driven than it has seen before. So all in all, I see a positive forward-looking story in terms of it. Yes, this is a portion that is there, which is looking down in this short period, in this particular month that you are showing. But I don't think this is going to be long. You're going to see a fast turnaround in the next couple of weeks and months that are coming forward.
Mr. Singh, I would want to pose this question to you. Would you agree with Mr. Hiranandani? Do you expect a big boost when sales figures are concerned, especially during the festive season?
The sales are going to be up definitely in the festive season. Okay. And this quarter is going to be the most aggressive quarter of 2024. So yes, to answer your question, we are very, very bullish on how the real estate sales are going to perform in this quarter. And it is an upward trend.
Okay, and Mr. Singh, since we are talking about the rate cycle, how much of a role do global factors have on India's housing market? Because, of course, we've seen major central banks across the United States, Canada, etc. They've also started lowering their interest rates, right? But RBI, of course, is yet to act. And you also mentioned, in your opening comments that whether or not a rate, rates are getting going down or not. That in itself is a question mark right now. So, how would you really look at the global scenario, and how would it really impact India's housing market in the current context?
India is an outlier, I would say, in this regard because whatever the global pressures are, the Indian economy is performing superbly. And I don't see that to be a challenge on the demand front. And I don't think the Indian consumers are bothered with what the global trends are showing at the moment. There is a need for housing, there is a shortage of housing in the country, and people are going to go ahead and make that purchase if the need for the same exists. So global India is kind of it's not the global pressures are not warranted on the Indian conditions at the moment.
All right, point taken. Mr. Hiranandani, coming to you, will developers adjust their pricing and incentives to capitalize on the potential increase in demand that you spoke about?
And that's difficult to judge, actually, in a forward-looking economy like we have today. You have to understand that the demand and supply, we talk in macro terms. But in reality, it's a question in areas. So let's say the demand in MMR has gone up. It doesn't mean that all parts of MMR, the demand will go up. Or if you say Mumbai region has gone up. So South Mumbai may grow at a different pace. Other places will definitely grow at a different pace. So while I believe that there is an overall growth rate which we are looking at, segmentation, there could be a fall in some of the locations that are there. But by and large, we do see that those factors where we see infrastructure improvement, where the employment potential is still proactive and positive, and overall the Indian economy is looking up. All these factors are positive. Yes, there are headwinds. You're right. That there are headwinds like the Russia-Ukraine war, there's the headwinds of the Middle East crisis, there's a danger that the oil prices may shoot up from $70 to God knows what. So all those are definitely headwinds are there. But look at the picture which we have seen in the last 1 year. Have any of those headwinds reduced the pace of GDP in our country? No. Has any one of them affected the real estate as a macro picture? No. Is the commercial real estate, which has been affected all over the world, especially the Western countries, affected India? No. So if you have those factors, already we have been able to overcome and understand and accept those things. And in spite of that, the demand is growing. I don't see any problem on the macro level. Yeah, certain areas we will have problems, and that is always the case, So like, for instance, let's say car sales are going up. It doesn't mean that every company's car sales are going up equally. It's going to be that some cars will go faster, some will go slower, but on an average, the growth will be there or not be there. So I'm saying the same thing for the Indian real estate. The growth is going to be there. The compound of growth will be 10% plus, at least, I'm saying, in terms of an overall macro growth. Segmentation wise, I think Colliers will be able to tell us better which cities are more likely to grow and less likely to grow. Maybe they can give a prediction. My reasoning is at least the Mumbai region looks very, very, very hot. And because of the infrastructure which is taking place, 300 kilometers of metro, Cross Harbour Bridge, Coastal Road, all these factors are definitely a proactive thing which will bring volumes as well as maybe a price rise too.
Right. Coming to Mr. Singh then on the point that Mr. Hiranandani mentioned as to areas wise how things really will pan out. Mr. Singh, you can provide us with a better picture. Just to give you a background, Hyderabad's real estate market witnessed the worst decline in both sales and new launches in the third quarter compared to major metros in the country. On the other hand, we've seen what's happening in Gurugram, which had seen a 89% increase in housing sales and an almost 180% rise in new launches in the same period. Now, at a time when the trends are shifting, which markets should one consider, and should buyers take yield into consideration before buying a house?
Categorically, every market is different. Now, while we have seen a tremendous rise in NCR in terms of pricing, please understand that this is a very investor driven market, and people tend to flock this market when there is an upward trend. uh, I still have a lot of confidence in Bangalore and Hyderabad because it's a very end user driven market and the pricing is still very, very realistic. So, to the way I see this, any real estate growth has to be driven by end use. It can't be investable. It's not an investment product, like I've always said. So it's the end users who is going to drive sustainable growth in this sector going forward. We should not be here for the short term. It's a long term investment. People should look at this investment from a very, very long term standpoint too, and while they're looking to upgrade their current lifestyle and address a housing need that may be lacking in their in their current scenario. So please treat real estate as an end use product. The rental yields in the real estate across the country is between 2 to 3%. So it does not really make sense to invest in real estate for an yield perspective, and it's not right for the market if you're looking for a quick buck out of real estate. So please stay invested only if you are having an end use need, and that is how the market is going to move forward.
All right, I have certain questions with regards to the Mumbai property market, and Mr. Hiranandani, I'll come to you for that. The fact that real estate premiums in Mumbai are significantly higher compared to other cities, this has been a burden for developers as well, right? Making it difficult for them to create affordable homes. What do you really have to say about that?
I I think I flagged it off in all social media. It's kind of viral quite strongly. I have been saying very, very clearly, because on one side, the government keeps on pleading that you want to create affordable housing in the Mumbai city and suburb. And on the second, the charges in terms of costs, which they have put up in terms of taxes, when you look at GST, you look at additional FSI cost, development charges, land under construction cost, and other charges which are put on the developer, including stamp duty and registration charges. If you look at all those things, they are coming more than 50% of the cost of the house are in government charges. Now, the prices have gone up, but the prices have gone up, the more they have gone up, the more the government is earning in reality. So the profit actually and the thing investment is done more by the government than by private people. The government is a bigger partner in the whole process, which is fine. But then they should understand that affordable housing cannot be created when you have such high costs, both in terms of the ready reckoner rate, which is pushed and published, as well as the charges which the government are doing. I think a combination of this, the government needs to flag off for itself that this is a real fact on the ground, and they can't say that this is the contrary can be done by the private sector. In government sector can do it, because then for them land value could be any notional zero value or any other value that they decide. But for a developer, there is a cost to every property that he takes, and he has no option but to really do it. So that's the challenge in terms of affordable housing, at least in the Mumbai region. And we have been flagging it off both as associations. Naredco, Crida, and others also have flagged it off to the government.
Also, when it comes to the rental yields in the city, I was just reading a report, a couple of days ago. It said that renting a 1 BHK in Mumbai costs an average of over 5 lakh rupees per year, and that outpaces the average annual salary of junior level employees, which stands at a little under 4.5 lakh rupees or thereabouts. Now, reports say that this disparity is pushing professionals out of the city as they look at more affordable options in Bengaluru and Delhi NCR region, where similar flats cost nearly half as much. How will this impact rental yields in the city, and how much of a role should this play in the decision-making process when it comes to buying a house for investment purpose?
So two different aspects. Affordability in terms of rental is location-based. So if you want a very high, posh location-based, obviously the rentals are going to be high. But you do get affordability of rentals in the peripheral areas of Mumbai, or in the outlying areas, or in Thane, or in Navi Mumbai, or even in the outlying layers of Mumbai. But in the prestigious areas, obviously, the rental prices are very high. And those are prestigious areas where people would like to use that as a very prominent residential address, which is a matter of fact. Now, the question comes up as to what is the distance traveled by people to go from the homes that they stay at the place of work. That is where Mumbai is going to benefit. Because in the next 2 years, we are going to add 330 kilometers of metro in the Mumbai metropolitan region, which means that travel time from the places which are outlined today will become easier and faster and quicker than anything that used to take place earlier. So I think that is the best part, that rentals will become affordable because you'll be able to stay in outlying areas, especially those which are connected either by the suburban railway system or by the metro trains, which are now being constructed and likely to get into operation in the next 2 years. So this is the major factor which is really important as far as city of Mumbai is concerned in terms of the challenges that are there in terms of the price point of rentals that are there. So you will get affordable rentals, but you will have to travel by metro in order to get to your place of work and still have an affordable house because it will be in the outlying areas. But if you want it in posh areas, obviously the rental returns. The second part to your question is about the returns. We know nationally that the returns in terms of residential housing has been in the range of 2 to 3.5%, while in the case of commercial, it's between 6 and 8%. So obviously the returns on commercial is higher as of today than in the case of residential. And that is why you have more FDI and other funds going into commercial properties which are ready. And that is why also in some of the cases, the investments are taking place in the REIT segment in order to take advantage of the fact that the returns in case of commercial are higher, and hopefully it will grow further over a period of time so that more people will invest in commercial properties and seek a route of listing through the REIT.
Got it. Last question really to Mr. Singh then. From an investment perspective, would it be, prudent to buy a ready-to-move-in home, or should one invest in an under-construction property? What would be more lucrative?
Nandita, a very need-based answer. Okay, it depends on what stage of your life cycle you are in. How important is immediate movement? As per it's about how you're managing your cash flows. Basically, if you have the ready money to invest in the property, please by all means go ahead and buy a home which is ready to move in. But if you're still in a stage of planning your cash flows for an aspirational living for the future, go in for an under construction property because that will give you better options. It gives you a lower entry price point, and the product that you get in time is going to be more futuristic and suitable for your lifestyle. So it all depends on individuals to individuals in what stage of their present life cycle they are in to make that decision.
All right. Well explained, Mr. Hiranandani. With that, I would like to thank you guys for taking out time and joining in and sharing your perspective with us. It was a pleasure chatting with you guys.
Thank you.
Well, that wraps up our very first episode of Realty Returns. Catch the latest trends, developments and insights on the real estate market and how it impacts your investment decisions only on Money Control. Thanks for watching, and we'll see you next time.